In the meantime, I have to say, if we did have the pleasure of seeing any of you at Accountex or even the Digital Accountancy Show last month, very nice to meet you there, whether it was myself, my colleague Tom, who we'll introduce in a moment, was there as well as a number of us besides that. So hopefully we gave you a bit of a sense of what Swoop was at the time, how we might think about supporting your offering and your clients, and after this, if of course you do have any questions or you wanted to talk one-to-one, we're very, very happy to do that. We've got some time over the next few weeks. I think that should probably be enough time there just for everyone to make sure they're in the room. So proper introductions this time. My name's Ryan, the business development manager on the Swoop for Advisors channel here at Swoop Funding. My role is to meet accounting firms, understand their needs, understand their clients, and then think about how we can start supporting them, supporting you, supporting your clients as well across the whole funding landscape. So I brought my colleague Tom Hawley along today, who is our head of advisor lending here at Swoop Funding. He's a bit of a maestro when it comes to pretty much every aspect of debt in particular. His specialism historically is unsecured lending, but he's a jack of all trades and a master of them all as well. So I'll bring in Tom shortly just for some insights on really what we're seeing SMEs looking for, asking for, the challenges they're facing, and some ways that we've been able to help them to try and contextualize, I guess, in the context of your client bases and your clients, how we can help you as well. And of course, I should say, if you have any questions, pop them in the chat, and we'll do our best to answer them either now or even after the webinar if we need to. And there will be a recording sent out to anyone who can't make it afterwards. And if you're listening to this tomorrow, well, you've already received that. So just to go through very quickly what we'll be talking about today, and we'll take about 20-25 minutes on this, so we won't take up your whole lunch hour if you've got one, if you're lucky enough to have one. Just to think about on a very, very practical level, what are the challenges that both SMEs and accountancy firms are facing? What are their pain points? What are their priorities? And how essentially can we think about connecting those two issues in such a way that benefits you both? Now, I'm not here to give you a lecture. You know more about your clients, you know more about accounting than I do. But there are a few insights that we can share from British Business Bank, from Zero, from Carbon and others that I think just add a little bit of color and a bit of context to some of the conversations I'm sure you're already having internally in your teams and with clients as well, and possibly even with lenders. Then Tom's going to come in and talk a little bit about the funding landscape as we see it. And then we'll think specifically, we'll drill down into, okay, what is Swoop and how can we help? So we are a one-stop shop for funding, a platform and a service-based solution for you, for your firms, with an extension of your team. So keep that in mind as we go along, and then we'll talk a little bit about the specifics a little later on in a few minutes. So what are the challenges faced by SMEs? I think we'll probably all have a pretty good idea of what these are at the moment, with interest rates as they are, even despite the inflation data that we had, which is quite promising, hopefully, as far as interest rates for the rest of the year are concerned. In terms of appetite from lenders, in terms of rising costs, and in terms of access to funding. And one of the big issues in particular, and this relates to possibly invoice financing actually later on, is the time that it's taking businesses to get paid by their clients, be they retail customers or be they other business customers as well. That 1, 2, 3 month gap is getting stretched and stretched across the entire SME landscape to the point where it's starting to sort of slow down the gears of the whole industry, really, or the whole sector of SMEs. So how is it that they want more help to get out of this? Very interesting statistics, I thought, from the British Business Bank and Zero here. 39% of SMEs want more services, want more support from their accountant or their bookkeeper. Now, these might not be services that traditionally firms have offered. Many of you probably do offer things like management accounts, budgeting, forecasting, or even advisory work. But being able to communicate that with your clients is a bit of a struggle, but you should know that the demand is there, that the outreach is desired by those SMEs for you to be working more in tandem with them in the ways that work best. What we've seen in terms of funding is that 59% of debt funding for SMEs has come from challenger or specialist lenders. Now, this has actually been the majority for the last 2 or 3 years, but it's actually going up and up and up. So in a world where big banks are harder and harder to persuade to work with on the basis of debt, where those bank manager relationships have faded out, and now there are around 300 lenders just in the UK market alone, it's getting more and more difficult to home in on actually what are going to be the best funding options for their business. If you're an SME, if you're a business owner, and you might have found this yourself if you looked for funding for your own firms too. What's good is that there's a democratization about this. There are more lenders than ever. They're very competitive. What's bad is that it's harder to find them. And if you're Googling them, for example, the ones you're going to see might tend to be, frankly, the ones that are paying the most for their SEO. And generally speaking, not necessarily giving the cheapest or the best rates or terms either. What we do see, and this was some research from Carbon from last year, that SMEs are actually 4 times more likely to get funding through their accountant, their FD, or their bookkeeper than they are on their own. This is a function of a few things. I think there's the type of firms that would ask their accountant to do that probably are a bit more switched on, but also this is your job. You are as familiar, if not more familiar, with the position of your clients' businesses than they might be in some cases, have a stronger sense of the detail there. And also you may have contacts already from lenders with contacts, with other sources of funding as well. So there is an argument to be made that it is the accountant, the advisor, the bookkeeper who's going to be the best positioned, who's going to have the best insights when the SME owner may not. These are companies that typically don't have their own in-house finance departments. So you genuinely are their trusted advisor, and this that cliche term, but it's very, very true that you're the best advice that they're going to get. And that, as we'll come to later, is sort of where we come into the situation too. At the same time, this kind of latent demand from SMEs is mirrored by some of the issues that you've probably seen affecting the accounting industry as well. Things like staff retention, which has an impact on the value of your time when you and your team are having to do more with less, essentially. And the resources that come from having a smaller team than you might otherwise have, and having maybe a narrower skill set than might be possible in a more fluid employment market in the world of accounting. Thinking about pricing, thinking about how so many firms have added so many forms of advisory services rather, whatever that means in the last few years. Now there's a desire to try and build up pricing models to actually reflect that as well. So that yes, you're giving the clients more value, but you're also being able to maximize your fees, make your firm sustainable, and be able to provide them support in the longer term as well. Similarly, education and development, with so much change going on, regulatory bodies, qualifications, struggling to keep up. So how do you make sure that your team is au fait with funding? And then how do you access this without spending hours and hours Googling it, as a client might? What's the way that you can quickly find ways to get funding, quickly give your clients answers, and give them the value in a very impressive, kind of efficient way? Now, this, again, that latent demand from SMEs reflected on the side of accounting firms. 65% of firms surveyed by Spotlight describe themselves as progressive. This is actually a really staggering figure because that includes them working a lot in advisory roles. So we're seeing a majority of firms now, 65% of firms having some capacity for advisory work. But at the same time, 57% want to do more of that. And that's very easy to say that you want to do more of it, but how can you do that when time is limited, when staffing and resources limited, and when there is still education on the client side, despite what they know they want from you, hesitation on the client side or lack of understanding in terms of how exactly their accountants can help them as well. One interesting trend actually is that for the first time in 2023, VCFO and advisory services actually overtook forecasting and budgeting as revenue generators for accounting firms. It's now 23% of revenue for accounting firms comes from VCFO and advisory work in general. And as you can see on the right there, the majority of firms are looking to do more work than less, as we said earlier. So how does Swoop fit into this? What can we do to help? Basically, as I say, we're a one-stop shop for funding. We cover loans, grants, savings, and equity, pretty much the whole of the market in all of these areas. So on the debt side, we work with all of those 300 lenders I mentioned earlier across everything from asset finance to commercial mortgages to merchant cash advances, VAT, corporation tax, HMRC funding, secured, unsecured. I could go on. We work with the big banks. We work with those alternative lenders, the ones also that you might see at the top of Google. We work with niche lenders and smaller ones, storybook lenders. So if you've got clients that are objectively fundable, what we'd say is we can find them funding and hopefully several different options as well to give you to present to them. We also have the most comprehensive grant finder in the UK. As of yesterday, 503 grants on there. Innovation, competition, local, regional, national, even European grants. We are an Irish company, so we still have a foothold in the European market. That's a really quick way to find out if your clients can qualify for anything, to start conversations about funding with those clients. It's always a good conversation starter to say, what would you do with £20,000 or even more than that? And this way we can work with grant writers. We can empower you and help you with pricing in terms of grant writing yourself. Or of course, you can simply direct the client to look into it. But it's a really good area to hopefully get some quick value for them if there are grants that are relevant to them. On the savings side as well, another great conversation starter, we can look at energy savings, typically getting between about 10 and 30% off. We can look at credit improvement for those clients who are maybe not necessarily in a position to borrow or do not want to borrow. Or maybe they are, but they can't get it. And we can help put some building blocks in place to get them close to that point. We can also look at business insurance. We can look at pensions, Forex and Forex hedging, and even deposit savings accounts getting between about 4.25% and 5.25% now with instant access. So if you've got clients who have the opposite problem to cash flow issues, and maybe there's cash rich and it's getting chipped away at by inflation, although less so than it was last week, apparently, then that's definitely something worth considering. And on the equity side, we also work with about 300 different investors. So again, if you've got clients with really innovative ideas, they have a product, it's on the market, and they're looking to get to that next stage, that real growth jump after seed funding, absolutely worth having a look at that panel of investors, everything from family offices to VC firms. 70% of them roughly looking at SCIS and EIS opportunities. So a great panel to get your clients' ideas in front of, and we can even support them with pitch decks, for example. Now, I thought I'd bring in Tom here just to think about some ways that he's seen the funding markets impacting SMEs, what SMEs are looking for, and how we've been able to help them. So over to you, Tom.
Great, thanks, Ryan. So yeah, I mean, in terms of kind of conversations that we have with accountants and their clients is always around I suppose the breadth of solutions that we can support with here at Swoop. And what it really comes down to is the business itself and what necessarily those pain points are in terms of how they're potentially looking to grow over the next 12 months, or maybe if they've got cash flow concerns over the next 12 months. And what can we utilize within not just the funding market, but the savings market as well? And what tools that we can utilize to, I suppose, solve that problem or assist in potentially their growth plans, like I said. So that's the first thing that we will always try to do, whether we have initial introductions from your accountant, or when we have conversations with those businesses. and the scope is really, really broad, and that's what we really try and do here at Swoop, is bring everything together into one place where we can advise on different markets. So, as Ryan said, my expertise lies in the debt finance space, predominantly within unsecured finance, and just within that kind of small piece there, we can see some options, whether it's a standard business loan, different working capital facilities, such as potentially revolving credit, or different levers that we can pull in terms of the flexibility side, whether that's spreading the cost of payments to suppliers, or whether it's utilizing tax funding through those VAT and corp tax loans to retain cash in the business, and understand where, I suppose, be able to achieve their goals moving forward. So really, really comes down to the business. And I suppose a key thing that we're seeing at the moment, and what a lot of businesses are becoming more and more aware of as we move kind of post-COVID, is that base rate is more expensive and higher than what it was previously. And generally, loans are a little bit more expensive than what we've seen. So a key part of our role within that initial conversation with the business or an accountant as an introducer is to be kind of transparent and really advise on where the market is currently. What the knock-on effect of this, and as we've moved through kind of post-COVID back to a much more kind of traditional market, is that some lenders are being a little bit more risk averse with who they're lending to, and this is potentially shown in the products, which is why also we have such a broad scope and look at all the different things that we can look at. So it might be that a business comes to us looking for a loan over 5 years, let's say, for example, but it might be that something more flexible on the invoice finance side, because they've got 300k worth of debtors, is probably more suitable to their needs in terms of how they can assist from a cash flow perspective over the next 12 months. So for us, it's really important to have a strong relationship with the accountant, to understand the business, and understand what their needs are, and then really be able to get under the hood of the business and see what solution potentially would be the most suitable. I think from our end, and myself, obviously been in the business a number of years. Working with accountants for us is always beneficial, just in the respect that you are a trusted advisor of that business. We can be an extension of your services. We can add value to you and your clients in a way that we can offer access to these different funding solutions. And generally, the information that you have access to about the business is super, super useful when we actually then go and approach lenders to actually facilitate those solutions. Generally, the more accurate and insightful information we can provide to lenders, generally the better facilities that we're going to get access to. So for us, we're happy to take any conversations, big and small. There's so many options out there. It's just really just asking those questions, and I suppose being proactive in having those conversations with your clients.
And just thinking back, Tom, to one of the earlier slides, and payment times being an issue for businesses. I mean, you're the funding expert, but I see some of the work that you and your team do. How are you seeing invoice financing, for example, and factoring help address that? And I think there are some new players into the market that are really doing some pretty compelling products in that area as well. And how have you seen them help businesses?
Yeah, for sure. So I think that invoice finance historically has generally a bit of it was always viewed as essentially the lend of last resort, potentially where other banks potentially can't assist. Generally that when everybody hears the word invoice finance, they think, okay, or previously this is what the thought was, okay, well, don't want to get involved with this. But as we've moved in the past few years, the market has definitely shifted in a way that there's a much broader scope of options. So not just through potentially the invoice factoring side, where essentially you will pass the credit control over to the lender, who will then deal with the debtor to recover the funds owed through the invoice. We've got invoice discounting, which is essentially confidential to the debtor, which a lot of businesses that we speak to are quite keen about. In a similar respect, we've got some selective or spot factors, where if there's maybe a single invoice that you're looking to raise against, in relation to whole book. So there's a lot more of a broader scope in terms of the actual options. We have had a lender recently join the market where they essentially can give it acts closer to, I would say, a revolving credit facility, dependent on what your debtor book is. So from the facilities where you essentially get access to a credit limit that you can essentially upload your invoices to, where you can get access to up to 99% of the invoice in comparison to more traditional facilities, which is maybe kind of 80, 85, 90. There's also no recurring fees. You're only charged interest on drawn down funds. There's no PGs and there's no debentures. So pretty divergent in terms of what has maybe been currently or previously available on the market. We've seen lots of interest in that. But again, that's one solution out of a number which we can explore, even just within that invoice finance space. So again, really comes down to the business. It might be that solution is the best one, and we can put that forward. Or again, there's other things that we can potentially facilitate. So yeah, I suppose our role and something that our team does is be involved in the market day in, day out. We're speaking with lenders all the time. We're speaking with businesses all the time. So we are on the button in terms of what is potentially the most advantageous things out there.
Thank you, Tom. I won't ask for your prediction on rates changes next time there's a review from the bank. I think it's a bit unfair, but absolutely, Tom's right. One of the advantages that we see of working with a funding partner like Swoop is that we can work across teams. So Tom has the ability to pull in members of the funding team from all of the different areas, and so that they can work together and find the solution, as he says, that's actually going to be the best outcome for a client. If you've got a commercial mortgage contact somewhere, or you've got an asset finance contact somewhere, that's fantastic. You're already ahead of the curve in a lot of ways, but they're not able to work together. The advantage here is that we've got a 30-strong funding team that can eventually work with you and find the best outcome, as I say. We even had an accountant who came to us, joined the platform, and we did actually find some funding for their client. But then also, this particular accountant wanted to open up a gaming arcade of all things, which is really quite niche. So we were asked to find a commercial mortgage, and we did. But actually, in the end, after some discussions with the accountant, after some discussions with lenders and some internal discussions too, we realized that the best way to go there was actually having a smaller commercial mortgage than what we'd been asked to do, and then fold in an element of a secured lend and an unsecured lend alongside. And between the three of them, actually that produced an outcome where the monthly repayments were more affordable, where the liabilities, the guarantees were split more equitably between the two directors, and where fundamentally it was a cheaper interest rate overall on average. So it's often the case that even an accountant, let alone an SME, a business owner, and they're not expected to be funding experts by any case, will end up with a much better solution than even what they had in mind. And they may not even know that there are options available like this. And that's what we want to empower you to do. We won't talk to your client directly unless you ask us to. We are here to support you in giving them that insight. But how do we actually go about that? So we have the Swoop for Advisors platform itself. This is very intuitive, very simple to use. It looks a lot like that. As you can see, it looks exactly like that. You can add a client in about 30 seconds. There is no credit search, soft or hard. We do not share the data until we share it with a lender at the point of an actual application with them. But you can add the client in about 30 seconds to a minute. If they're a limited company, we get company's house data. We can integrate with Sage and Xero, and that's going to help the algorithm home in on what are the best solutions. And then you can see out of 500 grants, there might be half a dozen or a dozen that are relevant on the basis of location or sector that you can read about, apply for on the platform, share with the client, get our insights. You can see debt products from, again, thousands of them from 300 lenders shrunk into a few dozen options to look at least in the first instance. So you can play around with it. You can get a sense of what's available. And this is our first port of call, really. So the portal is what does the heavy lifting. But then at that point, that's where Tom and his team come in, and they would be working with you, find out a little more, find out the story within the story, if you like, read between the lines and think, okay, what's the best way to go forward from here? the best lenders to approach, and with what case as well. You're also supported by the advisor team here. You can see hopefully some familiar faces on there. And our job is really to be your funding advisory team. So you'd be working quite closely, possibly with Annie. There you can see, second from the top left, and our head of the channel, Santaska Grinley, who is an accountant. He actually happens to be the chairman of the West and North Yorkshire ICAW, which means that there's always someone here who you can have quite a granular conversation on at that level. And it also means, because we do work hand in hand with the ICAW, you do not need a DPB license to work with us. We work in the unregulated space, so essentially business to business with mostly limited companies, but also sole traders under £25,000. And we can share letters of engagement with you that meet the ICAW's advanced consent requirements. So all of the onus, if you like, then is on us. We are the FCA regulated party. We are also under the National Association of Chartered Financial Brokers. Try saying that quickly 5 times. So there isn't anything that you need to do in order to be working with us that you don't already do. How do we go about supporting you then? So we give you access to the platform where you can find, again, those grants, the savings, equity, and debt as well. But what we really don't want to do is throw it all at you and then just say, get on with it, because you're busy. If you do have resource and staffing deficits or issues within the firm, the last thing you need to be doing is thinking about this enormous kind of platform and world of funding and trying to fumble your way through it on your own. That would be quite unfair and probably unproductive for everybody in the end, for us, for yourself, and for the client, most importantly of all. So we want to help you get the most out of it. And that's what the success team is to do. We can think really proactively. So we might start by thinking, okay, let's have a go with you in our kickoff meeting at maybe segmenting some clients. Have we got industries, sectors that we can look at? Are there borrowers and non-borrowers? Are there homeowners and non-homeowners? Are there firms that have a lot in the way of assets if we're thinking about certain types of borrowing? So there are ways that we can work with this to start small and then build up. It might even be the case, again, looking at something like energy. We were able to save a small business £7,000 a year on their energy bill a couple of weeks ago, just by asking the accountant, do you have any clients who work in energy intense areas? Maybe it's retail, manufacturing, hospitality, care homes, of course, something like that, nurseries. They seem quite tangential. Energy seems quite tangential possibly in that context, but that can make an enormous difference. Again, insurance, pensions, also on the savings side too. So our job is to think about how you're working, think about your team, and think about your clients. And to that effect, we also give you a CPD accredited training platform. This is a portal that the whole team can access. So anyone who's having conversations about funding with clients can get a little bit of insight and get some confidence to start engaging and having those conversations with clients. And anyone that you want on the team to be taking some of this on, we can help get them there as well. Because what we see is that when it comes to funding advisory work, it's the partners and the directors who are spending the most time on it, which is great because you've got the most insights, you've got the most experience, you might know the client inside out, and you might have the contacts, but yours is the most valuable time. So the opportunity cost can be quite steep, shall we say the least, especially if there are issues around pricing for this as well, or there isn't actually a structure for that yet. So what we want to do is essentially democratize this, help give your team some confidence and some insights, again, to start having those conversations. So they can go onto the training portal in half an hour. You can get a workable understanding of, say, invoice financing or the grants landscape or how equity works, just enough to have those sort of light bulb moments when you're talking to a client. We also give bespoke masterclasses, and you'd probably see Tom on some of these. Now, these can be very, very useful because these are tailored to exactly what your needs are and what your clients' needs are. So we can address knowledge deficits that might be on the team. We can address even knowledge deficits among clients. We can have client-facing masterclass as well, and Tom actually has been trying that out to great effect a couple of times in recent weeks. It can be about funding itself. It can be about the landscape. It can be about useful ways that we've seen to link funding into other conversations you're already having. If you're working in budgeting or forecasting, for example, being able to fold funding into that conversation raises the salience of all of it. And, good budgeting can be or good forecasting can be quite expensive. So justifying it in a way that actually has an end goal and says, we can do this to help you get to X revenue or X turnover by month Y of this or next year, using some of these funding levers that you've now got access to. That's a powerful tool to have. We also give guidance on pricing. So this actually might come, a little later on, once we've seen some successes and once you've got a sense of how we work and vice versa. But most of the firms we work with will charge for access to either grant writing from yourself or access to energy savings, savings accounts. And generally speaking, they're very, very happy to do it because you're saving them time and you're working with the experts who can find them the best deals on all of these things. So it is of value to them. We do split commission with you, and again, in line with ICAW rules on advanced consent, but more than just ad hoc commission sharing, being able to actually help you boost fees, boost your referral and retention rates is fundamentally what we're aiming to get to here, as well as supporting the clients. We even have anecdotal case studies of staff retention increasing from the education, from the masterclasses, from empowering teams to have more of those conversations too. And then we can think about process. So, okay, what's your tech stack at the moment? Are you, for example, maybe using Go Proposal? How can we work in some salient questions about funding? Maybe it's grants, maybe it's sort of sector specific into those initial conversations, for example, so that this is always part of the script or part of the conversation you're having with clients from the very beginning. We also give you access to a marketing portal. So whether you're doing any or not at the moment, whether you're spending money on SEO or social media advertising, we give you a vast resource and we can help you put together a bit of a plan. So if you want to reach out again to particular segments of clients, particular industries and sectors, if you want to reach out at certain times of year, based on certain types of funding, certain locations, we can help you do that. Materials for your website, for blog posts, emails, social media, the lot. Really, again, thinking about how this links in with the education, this is about empowering you and the team to be able to have more of those conversations and I guess use the time that you have more efficiently by using us as the team doing the legwork on the majority of this as well. And we'll be proactive. We'll be on the phone to you about as much as you are to us. We can promise you that. So I did promise 20 or 25 minutes. I think that's about 35. So does anyone have any questions? Are there any urgent inquiries, or are there any areas I can clarify for you, either myself or Tom on the funding side as well? We'll just give that a moment. Depends how fast everyone can type. See if you've doesn't look like anyone's been on Mavis Beacon, or I have bored you all to death, or we have been perfectly comprehensive and very clear, which would be ideal. Either way, we will be sending this recording out afterwards. Again, if you do have any questions, let myself or Tom know. You'll hear from me shortly anyway, if you haven't already over the last few days. I think there's a question from GS there on how much does the service cost. So yes, we do work on a subscription basis. Fundamentally, that's because it allows us to look at things like grants and savings where there is not commission to be made for us, but it's a very important way of supporting the clients. And it also means that we can give you those extra value-added supports as well, rather than it just being a self-serve platform. This depends, not to be weaselly about it, but this depends on the nature of your firm, and we can certainly talk about this. I think I might have spoken to you yesterday, possibly GS, or I might be thinking about somebody else. But if you are an FD, we have slightly slimmed down packages that work for FDs that reflect the fact that you might be on your own, and we don't have educated teams to educate, for example, and a lot of onboarding and implementation. And that would be from £90 a month. At the other end of the scale, we've got sort of setups for multi-office firms with a white label version of the platform as well. And that would be upwards from sort of about £320. So it is going to depend on exactly what your needs are. That's why it's important, I think, to have a kind of one-on-one conversation and think exactly what's going to be the most suitable solution here. But then our aim is to get some runs on the board for you so that when even one deal, for example, on the debt side might go through, that can cover your entire subscription on its own. And then we can think about building pricing in as well. So hopefully that answers the question. My email address is ryan@swoopfunding.com, which is relatively simple to remember. So if you want more clarity on that, just let me know as well. Brilliant. Thank you, GS. I think that's all for the questions. I will wrap it up there, but thank you very much for your time. Appreciate if any of you were at Accountex or DAF last week, you're probably still catching up just like we are. So this is premium time for you. But again, thank you very much, and hopefully we can speak soon.